Greetings and welcome to Downhole Energy's brief presentation of wealth preservation options in today's low-priced oil market. I'm Kyle Thomason, Managing Partner of Downhole Energy and Vice President of our parent company, Coastal Petroleum. It's coming up on 1 year since the big plunge in oil prices. Plenty of oil companies have left the building, plenty are sitting on the sidelines watching and waiting, and some, such as ourselves, find this time to be particularly advantageous to being exactly where we are, which is to say, working as an oil and gas operator, drilling for oil on thousands of acres that encompass over 1,000 developmental drilling sites, which are key to our sustainability in a low-priced oil market. The media's perception that oil and gas companies cannot make money in times of low-priced oil does not apply to everyone. We at Downhole Energy want to explain why. So why oil? What's good about oil now? For those of you tuning in, I'm sure the concept of buy low, sell high would be at the forefront of your thinking, and you would be correct. But the real reason, the biggest reason we're talking about oil in today's market is this. We want you to know that there are companies today that can provide long-term growth, capital preservation, tax incentives and advantages, flexibility as to investment size, projects that can be tailored to your risk-return specifications, projects that can go on for 20 to 30 years or more, projects that can provide risk mitigation and passive cash flow, and finally, provide you with diversity into a commodity that has historically trended contrary to other asset classes that you may have in your portfolio today, such as real estate. And how great would that be to counterbalance those assets with a commodity that has proven over time to be a reliable commodity and, with current low prices, has the ability to provide a very good upside potential. But we're not waiting for oil prices to rise, and let's talk about why. Quite simply, we can make $40 to $50 oil prices work. Now, what do we mean, make it work? Well, any business isn't in business to not make a profit. Operators in the oil business make money by drilling for oil. Oil companies must engineer their projects so they have the ability to make money no matter what the price of oil is. If they cannot do that, they're not going to survive long. At Downhole, our costs allow us to engineer drilling projects that not only permit us to survive, but have the potential to thrive in times of low-priced oil. Yet the media pounds us day in and day out with how bad things are. But since when did oil companies making money ever give good ratings? Profitability has a lot to do with a company's debt holdings. Many oil and gas companies, big and small, took on outside debt when times were good in order to grow production. However, if that company took out a loan when oil prices were at $60 or $70 or higher, they still have to make those payments back. And do they have that money to do this when oil prices are now 70% less? Most companies do not. And the shedding of jobs, capital expenditures, and yes, bankruptcies are now detailed out for the world to see on an hourly basis in the media. How does that song go? Kick 'em when they're up, kick 'em when they're down. Give us dirty laundry. That's news. But is it reality? It is for many. But some companies, like Downhole Energy, have no debt. What then? What does that picture look like? For those companies whose management has had the foresight to have seen this and planned for it, the world is filled with a lot of oysters. And this is where buying low and selling high becomes their reality. Some operators, such as ourselves, are now able to negotiate discounted terms on well leases and existing production as compared to when oil prices were much higher. Think of it like buying a foreclosed property. How good is your cash flow going to be if you picked up an apartment building at extremely low prices? Pretty good. And what if you picked up a lease that already had producing wells on it, but those wells needed some reworking or even the ability to apply new technology to older wells drilled many years ago? How good could those wells be? And what if the people selling them were starving for cash to pay back those loans? That's what the other side of the fence looks like. And above all, remember one thing. We're engineering and creating projects that work in today's market, the extremely low-price market. Wells that may go on for 20 to 30 years or more. And if or when the price of oil rises in that period of time, how great would profits be then? That, my friends, is how you buy low and sell high and make money in a low-priced oil market. However, it wouldn't be fair to say that we can do what we do without our secret weapon, our wow factor. And that, my friends, are hundreds of shallow wells. And here's what the media never reports. We're the only country in the world that produces oil and natural gas in economically significant quantities from shallow or stripper wells. You see, small production doesn't sound sexy, and big numbers sell. But in the world of shallow well oil drilling, it's all about quantity and risk mitigation. Downhole Energy can do what very few oil companies in today's market can. Our shallow, conventional well drilling works and makes money in the worst of times, which for us is our insurance policy towards durability in a commodity-driven market. Further, because we have over 1,000 of these well sites, we can accommodate and create most any size of well package to suit investment needs. Few oil companies have the flexibility and product to do this. And if, like many, you're a fan of the future, the low-priced oil market has ramped up American ingenuity like never before. Our wells are cost-effective as they are, but also provide a perfect stage for new technological progressions, which we are working on today, thus creating the potential for additional economic upside. And whether your portfolio requires little or no risk diversity, or a slice of more risk-return potential, our company and the education we provide you with have you covered. Downhole Energy easily has the capacity to allocate a large amount of funds into a wide variety of drilling programs, thus further mitigating risk. Drill packages encompassing multi-leased, multi-state drilling have the potential to create larger income streams for entities that have this capability. As an independent producer with the ability to be nimble and quick, Downhole Energy is well able to take advantage of opportunities within this low-priced oil market which pass its way. Further, because we're all about education, we understand that your area of expertise may not be our area of expertise. We have an enormous enthusiasm for explaining how all facets of this great industry work from below the ground up. Please review our upcoming seminar schedule at www.oiltoday.com, and remember, we're always available for one-on-one learning sessions as well. We look forward to speaking with you, and thank you for joining us.